Hi guys, how are you? Vladimir Ribakov here, and this is the weekly review for the week starting on 27th of August 2017. Last week was very boring. We didn't see much during the week. It was very good for intraday. It was not good for the long-term traders or for investors. And this week we have the non-farm payrolls to come on Friday, which means the big money is sitting again on the fence, waiting for the data, waiting for the numbers before taking any decisions. What's next? We should remember that when we take our decisions, and we should remember there are periods for shorter term, there are periods for longer term, there are periods to be more aggressive, there are periods to be more conservative, and by the end of the month, normally, especially when it's summertime, it's good to be conservative. So, which means look for your right setups to come. For example, the euro dollar. Now, this is, for example, a pair that I always take such examples to classical conditions to show when setup is relevant, when not. While this stop was holding, I was looking for sales, and my view was, I go to the 4-hour chart, that we get triple wave down, something like that, very ugly, but something like that, double wave up, which means this one had to be broken after that, and it wasn't. And if two waves don't break to the downside, it means there is no momentum regain. So it doesn't matter really how much you wait for something to happen. Sometimes it just does not come, right? And it's like, it's like waiting for a rain, because prediction promised the rain. You can wait for the entire day, there will be no rain. It will be cold, it will be cloudy, but whatever, but there will be no rain. And same here. So, and this is why I always say, and I want to show you this example now so you guys remember, the most important thing for a trader when he starts his week or her week is to have a clear plan of direction. Choose your direction. If you are wrong on your direction, most of the times you would not be able to trade on your direction, because it's just moving to the other side. So you'll be wrong in the direction, you will not be wrong on your decisions during the trade, right? During the trading period. So this is a classical example. By choosing a direction, being wrong, but not getting the reasons to go and trade. And here's an example. That's exactly what we were looking for. Range. We wanted to see this trend line being broken, or at least this low to be broken and sell retraces, so we can say we are regaining the bearish momentum. And this is the importance. Once again, have your plan and follow it. And if it does not happen, don't trade it. Very simple. Now, the worst thing to happen is to be wrong, making a wrong decision on the direction, missing the rally, but on the same time not entering any other trade when there is simply no reason to. And I wanted to start this week with that, to show you once again the importance of having your plan and follow it. Okay, so this is the euro dollar. Now it changed, the plan changed, the direction was broken here, and the question is what's happening next. And the euro dollar, from my point of view, seems like it's doing this. So there is a very good chance that we are to 121 or even 124 zone. And here is why. That's 1, 2, 3, and potentially 4. That brings us to 121, 122. Now, there is a good chance that this is not over yet. So after a small correction here, we're gonna make, it turned a bit too big, but we're gonna make something bigger to 124. And why 124 is still a potential target? Because if we take the monthly cycle, we had a double cycle, and if we check its correction, it brings us to 124, 125. And this is where we might finally go. Now, since the range on the 4-hour chart was broken, the only way to invalidate our shorts would be break below the last low, which means here, currently. Okay? As long as it did not happen, or at least as long as we don't have this setup 1, 2, 3, 1, 2 and breakout, like we wanted to see in the previous week, we don't have now the short. Therefore, the euro dollar potentially could take us to 121, 122, and maybe even higher before the bears take the next control. Now, if we take a look on the crystal ball to predict us the levels we have here, that's 120. That's the next one, 121, 122. That's our area where we'll be really aiming as long as the bulls hold. And the final one we can see here giving us the chances that's next to 124. As per dates, we do have 28, 1st and 2nd, which means this weekend. We have the chances to see the tops, but remember, as long as we do not have false breaks and lower lows, 2 of them, because we're currently against the weekly, the bullish setup remains on. And every drop down is an opportunity to go and ride the rally, aiming the longer term targets. Now, as I said, the only way to invalidate the current bullish trend is to go below this low. Currently, it's below this low, or at least make 1, 2, 3, 1, 2 and breakout. That's the only 2 ways we can invalidate. And as long as it didn't happen, we are going up. And what other thing could happen here is something like that. So we have another false break and then lower lows. Okay, so as for now, that's the low. Of course, as the week develops, that might get developed. By the way, remember guys, this Monday, that's a holiday bank off in the UK, which means the volatility on the European session will probably be low. Okay, let's continue guys. So that's the euro dollar. The next one would be on our list, that's the euro pound. And if you remember, we have been talking about pretty much the same idea. As long as we don't have lower lows, that was our last week lows, we don't have the reason for sales. So we have a level, we have the resistance, we have the divergence. But is there a reason to go sell? No, if we don't have the convergence principle, which means at least lower lows to start to be created, why would we? Right? When you stand in junction and you wanna go forward in your road and there is a red light, do you press your gas? No. You are waiting for the green light, you look left to right, and then you go. Same here. Levels by themselves, not enough. Divergence by itself, not enough. Not always enough. And basically what we can learn from all that situation is like the euro pound. Now there is a great chance that this pair will turn to be one of the biggest and best investments in 2017 and probably will go through 2018 because it's approaching to some monster levels. Take a look here guys, and take a look here. This is a real monster here. I am not sure at all it's gonna be able to climb so high straight, but if we get closer to this area, that's approximately around 0.95, 96, maybe even a bit higher. This is a real monster where from some huge things gonna happen, very very big time. And if that's not enough, take a look on the monthly cycle and look what we have here. Now this sounds more normal, and this level is around 0.94, 0.95. So the closer we get there, the more amazing this setup would turn to be, and the better the action we will see from there. Now stay long as we don't have two false breaks followed by convergence or triple cycle down. In other words, as long as we don't have let's say two lower lows, two false breaks and lower lows, we cannot sell rallies. We stay long. We want to go longer there. And the other scenario that could make it invalidate the longs is triple double breakout. That's all. Triple could be special cycle, which means this could be bigger, but that's all. As long as it did not happen, stay long. Very simple. And the euro pound levels, we can see him. We can see it right here. We actually, oh no, we actually don't have him yet recognized by the crystal ball. See, It's not even yet found and possible. But as per days, we have the end of the month, 29 first. But the interesting part here is if it does not happen during this weekend, during this second part of the week, we are going through after 8, 13, 14, and so on. So you see that, guys? That's the power of the current bullish trend, which means very, very simple. Do not force things to happen. They will happen once things would be ready. Now, fundamentally, is this current rally is good for the Eurozone? The answer is no, it's terrible. And they will have, unless there will be something from the US, they will have to take actions. Bottom line. Let's continue. One other pair that is extremely interesting is the Euro versus the Kiwi. And now this one I want also to discuss about, because take a look what happened on the previous week. We got two false breaks and we got a convergence, and yet that was not enough. That was one, and this is two, and lower lows with the convergence here. Amazing setup. And again, I always say, look for two waves pullback, look for the breakout, go short. Did we have it? No, we didn't. Therefore, as long as this high holds, we were looking for sells. As it's breaking up, we're only after buys, and the next cycle levels here to be respected are slightly higher, but they are coming into play. That one was broken. Our next one slightly higher on the 168. This one provides us, you see, 261.8, slightly even higher, right? Yep, it has an impact right here currently, which means we might start getting some slowdown, okay? But the way it develops could take us even higher. We have 1, we have 2, we have 3, and it all can take us higher. 166, 167 zone, definitely zone to watch, especially if we take this triple cycle we've had on the weekly chart. This is where the 50% is. And this is where I will believe some slowdown will begin. Let's take a look on the crystal ball and take a look on the levels. 166, 167 zone, 170 zone. As per dates, we have end of the month, 29, to be very, very powerful day. If not, we're going to cross through that all the way until 5th, 6th, 5th, 8th, probably all the way to somewhere in the middle of the next month where the pressure would start to be serious. Now, levels, we have the levels. What kind of setups will invalidate our buys? Only if we start to get lower lows again after triple cycle. So false break, convergence, or triple cycle. So lower lows for convergence, retrace, and then we're looking for sells, retrace in two waves, of course, or triple cycle down, double cycle up correction. So 1, 2, 3, 1, 2, breakout. Only if one of these two scenarios happen, that means bears take control. If that does not happen, we do not have a reason for a sell. So we remain bullish then, and that's our levels. So every retrace we have to our buy levels is a good opportunity to do that, and we have few on the row. And again, remember, as long as we don't have false breaks and lower lows. Why? Because the lower lows are the ones that triggering for us the ready, the fact that the bears are ready, and then we can look to sell retraces. Let's continue then. That's about the euros. One more is the euro yen, another classical example for levels that were amazingly set, and we had this 100 and we had this duplication, and yet the market decided that it's not ready yet. That was the 61.8 of this level. We are probably going now a bit higher, which should be around 132, 133 most likely, or even 136, 137 zone, where we will be again looking for the resell. So as for now, it's bullish, but I want to pay your attention to two opportunities. Opportunity number one is that we had one false break on the top, one false break on the bottom, which means that all could turn to be a range. So this area could become again a bearish pressure. Okay, how would we go here for short if we start to get what? False breaks. So if this level is broken up and fake, which means retracing down again, we again look for possible resell. If it continues to the straight momentum up, the next levels would be as discussed before. If we take a look on the levels of the euro yen on the daily chart, this is exactly what we will see. If this range is broken, that's our next levels, 132, 133, and then that's the final ones. As per top, statistically top, we don't have nothing to stop it on our way. We have end of the month 28 to be middle class, and then we have second and fourth, which means there is a good chance that this current rally will continue through the week and very likely try and make it a false break to the top once again. So that's for the euro versus the yen, and that's enough with the euros. Let's continue. Of course, we have more, but we don't want to trade all of them, right? Let's continue. So the next one would be the New Zealandian dollar, which from my point of view has reached its first important level, and that's the 50%. And we have been talking about these levels 0.72, 0.71, and it's bouncing from the 0.72. Now we do have a bullish hidden divergence here. We do have a bullish continuing divergence here. We start to see false breaks taking place here. I would be very careful with this pair this week, and would not be surprised if it will try to make short-term, at least short-term rallies. 1, 2 false breaks under all divergence we have here. So it's as for convergence, we would actually we do have this one which no is not good for us due to 2 candles rules. This is our last high. We need to see broken to get the convergence in play. So the other idea is the potential triple cycle or special cycle, which means 1, 2, 3, 1, 2, and if that would be the case to be broken to the upside, we can discuss about a short-term buys to continue. But as for now, I cannot say this is a great, well, too good pair to be traded. We had a head and shoulders, which was found by one of my followers in the club, in a Traders Academy club, to be honest. But I didn't see that. But this, you can see it's kind of having difficult time right now on the neckline. Again, for a full convergence, we need this high to be broken. Until then, as long as it didn't happen, we might be looking for short-term sells, like intraday bounces from the levels. We have the channel going down, we have the resistances going down. That's a pretty good sign, isn't it? And by the way, if we take a look on the Scorpio, which would be released this week, by the way, we can see the daily and weekly already preparing as the sell direction, and we have a diamond from daily chart. That's a pretty serious combination for us for short-term sells. Again, we will want to see that stopping, and as possibilities for the stop, that's our levels. We have 1 on a daily, 2 on a daily, and this is the 4-hour chart. So if we do have this stop and we do have the bounce, that would be our place to look for short-term sells. And I repeat, short terms for one reason, because we do start to see 2 false breaks and a bounce from 50% on a daily chart. Why would we really want to go against, right? So if we do, it has to have the right reason for that, and the right reason for that would be bounce from trading action zones, trading levels. And we have them by the crystal ball. We have it right here, okay, and daily chart right here, and next to the channel. Now we have it 0.7290 approximately, and then 0.7340. That's our levels. And let's continue. The next one on the list would be the Aussie versus the dollar. Now this one is again very tricky. For long run, I want only for buys. For short run, I still prefer to see 2 waves down. So 1, 2, and from there longs. We kind of get this setup. Take a look what happens here, guys. 1, 2, 3, 4, 5, with some kind of a retrace right now happening in 2 waves, right? Now, as long as this top holds, I would be looking for possible sells, but only by breaking above this top and breaking below the trend line. If it happens, I would be looking for short-term sells. Again, short-term sells, because for the long run we are after buys. And if it does not happen, simply let it go, stay bullish with the long run. And this is classical example of how both scenarios could be in play. There is a great chance for a second leg down. There is a greater chance for continuation of the uptrend. We want to trade both if we get the signals on our strategies. But how to do that is by making invalidation for each setup. And invalidation is if you get your levels broken, mainly. In our case, that could be the trend line or a false breaks and convergence to follow. How? Like this. That's a trend line, right? Or it could be horizontal, breakout, lower lows, again lower lows. Remember, I always talk about it. Lower lows to regain the bearish momentum, and then we can discuss about resell for the short term. As long as that did not happen, we can stay bullish. And depends on our strategy we trade, that's what we can actually look and trade. And now, sorry, I have a bit of cough, so I have to pause my video from time to time. Sorry for that, guys. Okay, let's continue. Aussie versus the Kiwi. This pair is another monster. For long run, we still aim this top and maybe even to break it through. For short term, we are approaching to a duplication here and here. Now check this out, guys. Where is the monster? Around 110, 111. Divergence is developing here. Cycles are coming closer. So get ready for action. That's daily chart in place. So 1 hour chart to false break would be definitely great idea. So we want to see coming closer. We want to see lower lows, and then we will be looking to sell the rallies. Until then, stay long. There is a still good chance we're gonna see a bit more of the push to the upside. If we take a look on the levels here, we also have the levels getting us there by the daily chart. 4 hour chart, each of these levels, of course, is opportunity for us to long. As per days, we don't have nothing to prevent the longs on the current period, so stay long there. It's still more to come, more to go. However, it drop down here should be yet considered as opportunity to buy. The long-term direction remains buy, as long as we don't have 2 false breaks and lower lows. 4 hour or 1 hour chart, as the daily cycle is in play as well. Next one, well, pound dollar. Well, I don't have a read this one, guys, sorry, yet. I don't know, for me it's for long run only longs, but I don't have a read here yet. I would just skip that, okay? Now, this one is interesting, and this is the Swiss yen, which is finally making us the bullish call here. With bullish divergence and everything online, we get this. 2 false breaks and convergence. 1, 2, right? And a bullish convergence here coming and happening live. We have 1, 2. This should be our 3. In that case, we would be looking for 2 waves down, and with the breakup, we switch for longs. In other simple words, as long as this low holds from the daily chart, look for the triple cycle to complete, retraces, and look for buys and buys only. as long as this low holds, of course. Okay. Next one, dollar versus the franc, which starts to be extremely interesting. It did break, no, it actually didn't. It did break the 4-hour chart range, but the daily is still in play. Now, for this pair, what do we have? We have a long-term, probably, buys. Currently, it's dropping down, mainly for one reason. The Swiss bank said there is no real reason for long-term so negative rates. The bulls of the Swiss came back. The bottom line here is it might turn to be a short term. The pair is making for us some good setups here. We have one, we have these two. The current range might take us through to 0.93, 0.92, but on the same time we do have two false breaks. One here, one at the top, which means this is our current range, and from the bottom of the range we might be looking for setups for buy. How? On the lower time frames we need levels, and that's our current levels we have. We have one right here, right? And we have one right here. So we have this zone was bouncing beautifully previous week, now breaking down, which means it's not in play. We have here and we have here. If we break below one, we are looking for the second one. There has to be divergence on the short-term time frames, because daily cycle and a daily divergence would not be relevant. Short-term cycle should have the impact, that's a 4-hour chart or 1-hour chart. And from here, if we start to get lower lows, higher highs, we should be looking for the reversals. As long as we don't let the bears go on, stay bearish in that view, and aim the potentially weekly cycle level, which is around 0.93, 0.92. As per levels here on the crystal ball, we have one holding here. The next ones are very far. And if the momentum continues and we don't have lower lows switching with falls back to higher highs, we don't have the reason to go and buy. Okay, so levels alone not enough. You need to get very specific setup. As per bottoms, we have the end of the month, the beginning of the month potentially stopping that, and that's where we should be looking for these opportunities. As long as we don't have this switch for lower lows and higher highs setup, don't do nothing. Another opportunity here is because we've had triple cycle to the upside and double cycle correcting down, is to break above the trend line. Now, how do we break above the trend line? It has to be in a specific condition as well. It has to be 1, 2, 3, 1, 2. And then with the breakout, we can go and long it. But again, as long as we don't have this setup, the idea could still, intraday, short term, remain bearish. Next on the list is the pound franc, a pair I prefer to go only long, even though I might be missing these sell opportunities. Still, the way the weekly cycle performs and goes, I would prefer to go longs. That's the levels I want to look and trade from. From the weekly chart, we have this triple cycle. The next level would be around the gap zone right here, 121, 120. And the way I'm gonna long it would be two false breaks followed by convergence. And we currently have here a false break. That might be the second one here, and that could be the trigger. So if we break higher highs, I want two waves pull back, and then with the breakout, I switch my view only to bullish. Before that, of course, it's not tradable. It's just a waiting mode, waiting zone. But it's definitely a great opportunity to follow. Could that go lower? Yep, that could. You saw the cycle levels before. And that's why I have my very clear plan. If we do hold the levels and create the false breaks followed by convergence, it's going to be a time to trade. If not, we don't do that. OZN, well, for me, the pair still under short. The way to do that would be, actually, we got here triple cycle, right? We got here double cycle down. We got a trend line, but now it seems the momentum is weak. What could happen here is something like that, and from there, short. So I would summarize that probably this way. As long as we do hold this stop, every 2 waves rally with the broken trend line down, for me, come back to the sell. And I'm looking for short here. I would prefer short here. And that would be my levels. That would be the first one. That would be the next one. So it's pretty big range in between them, but there's the levels where I would be looking to trade from. And how to trade from? 2 ways, trendline breakout, or lower lows by convergence. Then we have the okay to go. As long as they didn't happen, we don't have. So I would prefer to go with the sell direction. Could that be wrong? Well, the answer is yes, of course. There is not a bad chance we are going to the 61.8 of this cycle, which means 91. So I'll do that very, very simple. I want to go short, and I will, but only if I get like higher highs and then breakouts to go short, and or alternatively false breaks followed by convergence. So something like that, and lower lows, and then I'll be looking again to look for sell rallies. As long as not, and the trend line will hold, there is a good chance that the buys taking the control here, and in that case that would be our levels for targets. Okay, you can see it's like 100 points in between each. So every drop on the intraday, like 1 hour chart levels, this or this, could suddenly provide a buy opportunity. Okay, aiming for the long-term buys. And remember, the final targets for longs 091. Next one, CAD versus the yen. Another interesting pair. Another one that had for us special cycle down, double cycle correction. I will switch short if we go break here the trend line and start to create lower lows. Then I will switch short and we'll be looking to sell the rallies. As long as it didn't happen, for me it's not tradable. There is nothing else to say about this pair, of course, and my target for this one would be the 38.2 of the double cycle, which means here 84. That's about the CAD yen. Now dollar CAD, that's a bit of mystery here. I don't have a clear setup, to be honest, right now. I wanted to see this on the previous week, and we did, but we never could have the break of the trend line to hold. It tried to break here and faked that. You see that? Break and immediately trace down. That's a very, very weak sign. Still, as long as this bottom holds, we might see anytime retraces. If not, there is a good chance that we are in front of continuation. And the next levels to watch would be pretty further. So technically it could go all the way to 119 for a duplication of the big cycle, like this. Okay, that's where the real levels are, here and lower. So as I said, currently it's, for me, it's not tradable, so I would just skip that. Let's continue. Next on the list, Aussie franc. The idea wasn't remain short from previous week. We got that. We had our levels holding, and as long as we don't have trendline broken and higher highs to be created, the short remained on, and there is a good chance we are for the duplication of this. So 61, actually 61 it was almost reached, so we can say that's a good time for partial cash out with this 61.8, but the final target could be all the way to the triple cycle, and it will be around duplication, and that's right here, 0.75 or 74.50. So those of you who are short from the previous week view, as long as the trend line holds, we do remain the short view, low trend line, and of course highs, because if the highs switch to upside again, short irrelevant. But as long as it didn't happen, we might expect a continuation. Cash out partially because we reached the first target and we bounce. How do we know level is respected? By bouncing from the 61.8 of this cycle. And for the rest, break even yourself and let the rest to run. There is a good chance we are aiming the 50% of the daily cycle retrace. This one, 50% of that. It should be right here. As per levels for Aussie franc, we have the channel, the entire channel, and we have the 0.76 zone, and on 4 hour chart 0.7650 to hold for the shorters. Alright, let's just check the list. Alright, New Zealandian Canadian and Aussie Canadian continue their bearish view. No reasons to stop. The only invalidation for this pair would be false breaks and convergence, which means we need this. False breaks, higher highs, and then we can go and long it. As long as it didn't happen, basically we broke the range, there is a good chance for continuation. So every pullback closer could be considered as a sell opportunity. Remember, to go short is best to do it by 2 waves retraces or a range. So that could be 2 waves like this for sell, or it could be the alternative of range and then breakout. Same with Aussie CAD, which seems aiming the trend line, weekly trend line, and the daily cycles. We have this level down, we have the bigger level down, even lower. Well, even duplication here is still lower. So as long as we don't have convergences to the upside and the trend line will hold and the highs keep dropping, view continues to be bearish. If we switch and we break for higher highs, then the view switches as well. Pound Canadian, same story. No convergences, no buys, only sells, and there is a good chance we are going to close the gap here from January. Maybe even one more bounce below for before the buys. It's a bend to bend movement, so we are getting ready for buys, but our buys would be only by creating lower lows and false breaks. So like this, false breaks, higher highs, and then 2 waves retrace, we would be looking for the buys. As long as we don't have that, view remains bearish. Rules are pretty simple, guys. Rules are pretty simple. CAD franc, we want to break here. It was triple down, 1, 2, 3, double up. We want to see the trend line breakout to regain the sell momentum. As long as it didn't happen, we don't trade that. Gold and silver remain bullish for the long term, and I would not be surprised if we are for the next target, and the next target is 1310, and then very likely if we break through 1380. I believe from 1310 we're gonna see some bearish forces taking a place again. Same with silver. Currently remains bullish. There is a good chance that around 1750 up to 18 we're gonna see that slowing down. And for indices, we yet have no momentum, unfortunately. But as long as the trend line holds and the resistance holds, my view is yet for sells only. And for the oil, my view remains bullish, and as I said not once, for long run, every drop down in 2 waves for me it's a buy opportunity. So whatever the strategy we use, we are looking to trade it to the long side. And I believe that somehow the fundamental combination building up should lead the prices to go higher. Now, does that mean it's gonna be immediate answers? Of course not. There is still a chance we are going to see that making deeper correction down. So 1, 2, 3, 1, 2, and after that a trendline breakout. But the deeper we go into waves, the better the buys should be from my point of view. And that's all. That's how I believe oil is going to behave, and my view remains on. So that's all for this week, guys. Thank you very much for watching. I hope you enjoyed the review and the levels and the opportunities coming to us. Remember what I always say, it's extremely important to have a plan. It's also extremely important to have your invalidation plan, because sometimes we have to admit we read the charts wrong, and our goal is not to predict, our goal is to trade the direction we choose, right? And if we choose the wrong direction, it's time to switch. That's all. It's not a competition who read the charts better or who read the chart worse. We are not analysts, we are traders. We choose the direction, we have to trade it with whatever the strategy you use. Okay? And as per strategies, you're probably aware of that already, but I invite you to my Traders Academy Club. On below, you can find a link to that. What we do in my club is live trading rooms and live usage of my strategies. If it's SRS, Triple B, Crystal Ball, the divergence principle, the cycle principles, Libra code, and soon other strategies would be applied as well. We show what trades myself and my team take on daily basis on the directions we set. So we set our preferences, what pairs we are long, what pairs we are short, what pairs we are both long and short that could be still in play, and we trade these directions. As I said, my goal and my team goal, not to be right on prediction. Our goal is to make money, and we make money by setting the direction and by trading this direction, trading based on the rules. And what we do on the live rooms, that's two things. One, we analyze the directions we set for the entire week. That happens on Monday normally, and then on every single day we just follow up with the updates and the validation or invalidation levels. And the second live room is the live education of the usage of my strategies. So whatever strategy you have or strategies, and you want to see how it should be used correctly on daily basis, Traders Academy Club is the place for you. You get 2 live rooms, you get tons of education, you get daily support by myself and the veteran members of the club, and you get all the tools you need to become successful using any strategy or strategies you have in your arsenal. My goal here is very, very simple. Inside the club, I show you how you set your directions and you trade that. Will we make tons of money every day? Of course not. But months by months for the long run, we make a consistent growth, proven by the directions, the reports, and proven by the entries taken by us. So that's all. I invite you to take part of the Traders Academy Club and enjoy the quality that myself and my traders bring to that wonderful place. I'll see you inside, and thank you very much for watching this video. Bye for now, Vladimir Ribakov.